are the challenges facing our Muslim community in the United States. And one of them was actually the lack of home ownership. So why the home ownership is so important for us as a community in the United States? So it appears to be as home ownership is considered to be an essential part of the American dream. In America, home ownership leads to stronger, healthier, and safer communities. Students of homeowners score better on academic tests and graduate at higher rates. So before guidance, residential and modern riba-free solution was not available for Muslims. And we can find this as from different statistics and facts, because when Muslim families are part of the community, they are looking not just for themselves, but for the whole community as a whole, because they are concerned more about, for kids to grow like in a healthy and safe environment, making sure they can go to masajids to learn about their deen. And that gives a stable environment for our kids to grow and thrive and succeed in their schools and their lives. So why this community or our Muslim community was lagging behind, like before the guidance or like at the beginning? Because simply they didn't want to buy houses with compromising their Sharia and their deen. That's why they couldn't go to conventional mortgages. Why? It's for the simple reason of riba. So riba, we have to see what Quran is saying about riba. I'm going to recite an ayah for you. Bismillah ar-Rahman ar-Rahim. الذين يأكلون الربا لا يقومون إلا كما يقوم الذي يتخبطه الشيطان من المس ذلك بأنهم قالوا إنما البيع مثل الربا وأحل الله البيع وحرم الربا. I'm going to translate. Those who take unlawful interest will stand before God on the day of the judgment as those whose minds have been corrupted by the influence of Satan. They say that commerce is just like interest, but God has made commerce lawful and has forbidden interest. So we all know as Muslims that riba has been forbidden to deal with in our Sharia, in our deen. What I didn't know personally is that riba was actually forbidden in all other major religions as far as Christianity and Judaism. So, subhanAllah, forbidden to deal with riba for a reason. So before I dive into the topic, inshallah, I'm just going to give you like a small roadmap of guidance, how it started until right now, before inshallah we'll talk about the Islamic home financing. So guidance residential started in around 1999. So it took us about 3 years. 3 years to come up with a program that will be Sharia compliant and at the same time will respect the law of the land, which is the United States. So Guidance Residential embarked in a 3 years multi-million-dollar research and development project involving 18 law firms and 6 of the world leaders in Islamic financing to provide an authentic home financing model compliant with both US and Islamic legal system. So I'm going to go to this into detail, inshallah. So there is actually different ways you can do Islamic home financing. But which one is more convenient and you can apply it in the United States? So we'll discuss about this, inshallah, like in the next slide. Okay. So guidance after 3 years, like I said, in 2002 they started the first time. They started in three states. So it took us about 5 years until we reached our milestone. So alhamdulillah, in 2007 we financed over $1 billion transaction in Islamic home financing. So we all knew that there is a lot of demand from our Muslim community in the United States to own a house and take advantage of home ownership. So in 2009, between 2008 and 2009, like everybody is aware of what happened back then when the crisis hit, and all the banks, the major banks, filed for bankruptcy. That's when Guidance Residential stood up. All the people from Wall Street, and they were curious and see what Guidance is doing different. Why all this did not impact Guidance? So that's why we have a lot of attention from the media, Wall Street Journal, Washington Post, and they start diving into the program, which is based on a co-ownership agreement, and they were trying to emphasize some advantage of this with their models. So in 2012, basically after 10 years of our inception, Alhamdulillah Guidance is not only considering themselves as a company, we feel like we are a part of a community. So we always feel to be present with our Muslim brothers in all kind of events, trying to support masajids, major events, ICNA, ISNA. And alhamdulillah, like within the last 10 years from our inception, we almost reached $1.5 million in support to the community. So it's a way of giving back to the community. So in 2015, that's another major step in our roadmap is we have an endorsement for AMJA. AMJA, or in Arabic, Majlis al-Fuqaha, or the Assembly of Muslim Jurists of America, is an assembly of a lot of scholars. They get together like once a year. They discuss a specific topic regarding the Muslim community. In 2013-14, I believe, they came together and they talked about the Islamic home financing. So they invited all the companies out there that they are working in this topic, and they invite them to like a conference to present their program. And from all these, I believe like 6 or 7 companies, there's only 2 that have been endorsed by them. There is one that works in California. They're only in California. It's called Amin Housing. And Guidance, who works nationwide, will also be endorsed by them, alhamdulillah. So in 2008, so we have been awarded by the World Finance Islamic Finance Award as Best Islamic Home Finance in the United States. So as far as right now, so we closed over $5 billion in Islamic in housing, and we financed over 27,000 families. And alhamdulillah, right now we are operating more than in 33 states in the United States. So this is like an overview of what Guidance, how it started, and what we are doing right now. So this is like a small graph just to show you what Guidance is. So Guidance Residential, as you can see all the way in the bottom on the right-hand side, it's just a small company, part of a big holding. So we are part of Capital Guidance, and the chairman of the company is Dr. Muhammad Hammour. So this is basically how Guidance started. So Dr. Muhammad Hammour, like I was saying earlier at the beginning, was asking about the challenges we have in the United States as a community, and they decided to launch a company called Guidance Residential, specifically for Islamic home finance in the United States. So they had their own funds. That's how they started. They started with their own funds, created the company, took 3 years to come up with a program, and they opened their doors to the public and the Muslim community. So as you can see, Guidance, along with other companies, Guidance Mutual, Guidance Securities, and Guidance Investments. I'm not going to bore you with all the details, but I'm just going to give you like an overview of the big company, what they are doing. So Capital Guidance is a private equity firm that creates, manages, and builds unique companies and manages a portfolio of financial investments. They have been founded over 50 years ago and by a small group of families originally from Middle East. So their capabilities includes investments, management, real estate, luxury homes, product, global industrial services, and international financial services. So they are based over here in Washington. I'm just going to share with you like a map. They have their offices, they have 77 offices across 27 countries across the globe. So it's a big company, alhamdulillah, and we are proud to be part of their family. So this is basically a small talk about Guidance. So Guidance, like I said, when they started, they invested with 6 scholars and 18 law firms to come up with this program. So it's not just a program that we came on our own. So we put them head to head. Everything that has been implemented has been approved by all these scholars, making sure it's Sharia compliant. And as you can see, they are from different madahib and from different regions. So you can see on the documents I give you, you can either go online and you can find out more about the details. And the chairman of the board member is Justice Muhammad Taha Osmani. So you can have his resume over here. He's very well known in the financial industry and Islamic home financing also. So this is our board member of Shuyukh. So as far as AMJA, so we talked about it briefly, but I just want to emphasize on this. because most of the other companies have been, I would say, reviewed by AMJA. They have concerns and they were not endorsed for different reasons. But alhamdulillah, in 2015 we have been endorsed. We had like two comments as far as our contract, and we addressed them with them as far as, since we are doing co-ownership, why we are not sharing taxes with the customers, and why we are not sharing the insurance with the customers. So I'm going to go into details about this, the way we explain to them and the way it's been addressed. And inshallah, we can talk more about the program. So you have in this document, inshallah, all the fatwa, and you can also go to our online and you can read them. They are in Arabic, some of them in Arabic, some they are in English. So this is basically an overview of guidance. I don't want to spend too much time on this, but the most important thing, which is the goal of this presentation, is this: is talk about the Sharia compliant program and what's riba, and go deep into this. So we all know riba is being forbidden in our religion. But sometimes from my experience, I came across a lot of brothers, they have misconception of riba. So riba, I'm just going to explain briefly from the finance perspective, is when money produces money just by the act of lending. In other words, if somebody comes to me and he's in a situation where he needs help or maybe assistance, and he's asking for money, I can help him, give him money, like let's say $1,000, and after a year he needs to pay me back with the same amount of money. Any extra amount on top of the one I gave him, that will be considered as riba. So riba or interest is a profit made from lending and borrowing transaction, and money has no intrinsic value. It's only considered as a mean of exchange. So that's why money can never produce money just by the act of exchanging. You have either to buy something, own it, then you can sell it, which is commerce, make profit, that's completely fine. So what's being permissible with it is, like I said, a charity act. Help somebody without getting an extra amount of money. You can trade with it, you can buy or sell goods or services. So this is what you can do with money. Now this is the core of our presentation tonight, inshallah. So if you have any questions, please take notes and I'll be more than happy to answer them at the end. So basically there's a lot of ways you can do Islamic home financing. We have three main options. The first one is what we call murabaha. Murabaha in Arabic is purchase. So it's when a financial institution buys like a car, a house, a company, or anything. They have to own it. They can, because before they can sell it to like a buyer or by installment, like 15, 20, or 30 years. So the key factor over here is they have to own it completely. They have to have their ownership before they can sell it to somebody else. That's murabaha. Musharaka is partnership. Is when two parties or two investors or two individuals get together to get their assets together to buy something at the same time. It could be like a percentage, 20%, 80%, 50%, 50%. You can buy a house or you can buy a car. As partners, it's completely fine. The third option is ijara. Ijara is lease to own. And the lease to own is basically very known in the dealership business, in the car business. So basically when you go to buy a car, it's either you buy it cash or you finance it, or you go with the third option, which is leasing. So this option is the financial institution, again, they have to buy a house or a car before even they start talking with you as far as what's going to be the lease, what's going to be the term. So the lease to own is like paying monthly payment, and those monthly payments are going to be paid like toward like the years, will be considered as part of the purchase. So basically you are renting until you own the house. This is what called ijara. So these three models, the most common and very famous one is murabaha, where in the Middle East a lot of banks they are doing murabaha because their model, their system is being established to do it that way. So when guidance came in 1999 and 2002, they went over these three options to see which one is more suitable to the United States. So ijara lease to own, it's not easy to do it like for 30 years. So you have to keep the maintenance of the house as far as lease to own. The car is very easy to apply, but not very easy for the car business, or for the housing business. So it was not an option. The second one, murabaha. Murabaha is The downside of this contract in the United States is what we call secondary market. A secondary market in the United States is created by the Congress. It's called Fannie Mae and Freddie Mac. So basically, this is a government institution created to give liquidity to any financial companies, banks, or other financial institutions. So they are not banks, they are not lenders. They are just established by the government to ensure to give liquidity. With Murabaha, when you buy a house, for you to sell it to somebody, let's say in 15 years, 20 years, one of the most important is you have to keep the house under your name for the entire term. You cannot sell it or do anything with it until that person you are committed to is going to buy it from you. Unfortunately, some banks, they are doing Murabaha, but they are going actually and sell it, but that's going to be a red flag. That's why AMJ did not approve this, because within Murabaha, you have to be the only owner until the person or the third party completely buy you out. So this is Murabaha. Now we come to Musharaka. Why it's very flexible to apply in the United States. Musharaka or partnership, we have two types of Musharakas. Okay, so we have what we call Musharakat al-Aqd, and we have what we call Musharakat al-Milk. Musharakat al-Aqd is the typical partnership we have between investors and brothers who are buying business or house. So I'm just going to give you like an example. For example, I am like myself, I have some assets, some money, and I want to invest, buy in a house. I can invest with the brother, for example, and buy another house on the market, so we can rent it like to somebody, like a third person. So I have $20,000, he has $80,000. We're gonna buy the house for $100,000. So we're gonna rent this house, let's say, for $800 every month. The rental income we're gonna get from this house, we're gonna be splitting it with our like between us, 20%, 80%. So this will stay, let's say we keep the house for 20 years or 10 years. So our share on the house is always the same, 20-80. So this is what we call Mushtarak Aqd. The partnership on the contract is always the same, but the benefit you are getting out of it will be split between you equally as far as profit and loss. So Mushtarak al-Milk, what's different is basically you have the agreement that between one of the partners will be ending up owning the house after, let's say, 15 or 20 years. So we have the intention the first time that we both own the house 20-80%, but this brother wants to live in it and he wants to take full advantage of the house and maybe own it like in 15 years, for example. So he's gonna pay us like the same rental income I was getting from the first scenario, but at the same time, he's gonna buy my equity or my share from us over time until he completely owns the house. So this is what Musharakat al-Milk means. Milk in Arabic is ownership, okay? So this is what we are doing basically. So again, to emphasize on the point of this co-ownership agreement is guidance as a company will own house with customers as co-owners through an LLC. So for example, if you like a house, you tell me, listen, I have $20,000 in my bank account, and I like this house, it's worth $100,000. I don't have all the money for it. So can you invest with me, buy it with me as a co-owner? We'll both create an LLC, and I'm gonna be living in the house. I'm gonna be paying you a fee for living in the house as return of investment, as your investment, and at the same time, I'm gonna be buying your share from you until I become the full owner. So this is basically what we are doing. So the benefit of this program is as follows. So first, it's been approved by our independent board member and AMJ. The second, it's no recourse commitment. What I mean by that is, when we create an LLC to buy this house with you, if something, God forbid, goes wrong, okay, this is where the concept of Islam comes in. If something goes wrong in this transaction, let's say we lost the house or for eminent domain, for whatever the reason is, and we both lost this house. So the risk of ownership will be divided between guidance and the owner, okay? And God forbid there is like, let's say we lost $20,000. Guidance will never take you to the court to file deficiency judgment against you to claim that $20,000 they lost. It's written in the contract, it says no recourse. So the LLC, everything stays inside the LLC as a company. And the LLC goes down, we can never go after your assets. Maybe you have a bank statement somewhere,
or bank account, or maybe you have another property. You cannot tell, brother, you have a property, you have to sell it to pay me back. No. So that second point is very, very important, and that's a very important distinctive for our contract. The third one we have is no prepayment penalty. What I mean by that is, since we have an agreement with you that you will buy the house from us at maximum 15 years, you are free to buy us out at any given time without any prepayment penalty. Okay, so let's say, for example, we bought the house with you this today. After a month or 2 months, maybe you get a lot of money coming from overseas for whatever source, and you decide to own the house. You are free to pay whatever balance left with guidance, and the house is completely yours. Some banks, they don't like that because they want to keep you with them as long as possible to make profit from you for at least 5-7 years or so. Okay, so the fourth one is shared risk, which I just explained earlier. So if, let's say, natural disaster like eminent domain, something has nothing to do with you as a person, that's something out of the ordinary, guidance will go and absorb the loss of this transaction up to their share on the house. And the last point is the late payment. Some banks, when you buy a house with them, they charge you a percentage. They can charge you up to 5% if there's a late payment, and they keep compounding. Guidance, they don't do that. We have a flat fee that will not go over $50. It's an administration fee. This fee will cover the administration fee as far as the person who's going to be taking your file, because if there's a late payment, at least we need to hear from you. What's the reason why there's a late payment? They can always work with you. If it's something temporary, they can talk to you over the phone, see how the schedule might go, and this is basically the flat fee that will cover. So this is an overview of our benefits. So here is a small video which I'm gonna share with you. So it explains how the ownership of guidance decreases over time while the customer pays the monthly payment, and it will also go over how the conventional mortgage works, and we'll resume inshallah the presentation. So let me just play through.
You're a potential homeowner, and you need to understand how home financing works and what types of risks are involved in the process. For that, we need to take a closer look. The current financial system works like a factory that sells money for more money. When you go to purchase a home, a traditional bank will happily lend you the cash you need, add interest, and they'll even pass along all the inherent risks of home ownership to you as a bonus. So in the event you fall victim to a natural disaster, eminent domain, or foreclosure, the burden to repay the full loan amount falls directly on you, with no one to help shoulder the load. Beyond its obvious shortcomings, lending, borrowing, and interest is also in direct opposition to what all monotheistic faiths preach. There is, however, an alternative. Guidance Residential's declining balance co-ownership program is rooted in the traditional Islamic belief that money has no intrinsic value and thus can't be sold at a profit. The program is a non-lending method to facilitating home ownership. Through Guidance's co-ownership agreement, you purchase the home of your choice by entering into a diminishing partnership where your obligation is simple. You agree to buy out Guidance's shares while also paying a fee for using the portion of the property you do not yet own. As your ownership increases over time, the portion of your monthly payment dedicated to this rental condition decreases. What makes this better? You can fully buy out Guidance's shares at any time without a prepayment penalty. If you're late making a payment, you don't need to worry about the typical 5% late fee that traditional banks charge and profit off of. Our reminder fee of $50 or less covers our administrative costs and never compounds. In the event of default, Guidance will only reclaim its share from the sale of the property, whereas other institutions typically pursue you for any proceeds not covered by the sale of the home. Should the property be lost due to a situation involving something outside the two parties, like eminent domain or a natural disaster, Guidance will share equity loss equal to the percentage of our ownership. With Guidance Residential, you don't have to worry about the worst case scenario. We're here to share the risk and benefits of owning a home with you. And we like to call modern finance with timeless values. Visit guidanceresidential.com to learn more about this consumer-friendly way to finance a home without compromising your ideas.
So this is a very good video to illustrate what I just mentioned as far as the program, how it works, and how it's been established as far as the ownership and everything else. So here is like a small comparison between what we are doing as Sharia compliant program and the conventional mortgage. So on the top, you can see to comparison that at the beginning we are actually co-owners, as versus in the bottom over here you can see the relationship between you and the bank is pure borrower and lender. In our case, it's a pure ownership as partners. So over time, when customer makes their payment, their ownership on the house increases and our decreases, and this is how they are going to buy us out completely. So at the end of the term, so they will become 100% owners of the house, where on the conventional mortgage, you are actually paying a loan. So I just want to mention something very important over here. So even on the papers, if they are completely structured differently. I mean, I have this experience with the type agencies when I'm closing with my customers. They said, this is the first time we are seeing this because they are not familiar with the partnership and the co-ownership. They said, how this work? I mean, they usually sign a piece of paper called a note, a promise of payment. That's basically a debt on your head. Versus guidance, actually, you are signing a contract, a decline balance co-ownership, which has 11 pages with all the terms and conditions we just went over earlier. So this is like an overview between guidance, again, conventional and other institutions. So first of all, we are co-owners, okay? We are not lenders, we don't have any relationship as borrower lender. Second, we are riba free. Conventional, they are not. And as far as other institutions, this is a very, very important topic over here because guidance, it's not a subsidiary of a bank. We are not borrowing our money from anybody else to invest with our customers. Like I mentioned earlier in the diagram is, guidance started with their own funds, which came from the company father of Guidance Residential, okay? And through that 3 years I mentioned earlier, we created this partnership agreement with Freddie Mac. Freddie Mac, alhamdulillah, we are the only Islamic home financing that they have approved to deal with. So we had the agreement with them that this is what we are doing. We are doing partnership and co-ownership agreement with customers. We're going to go with these conditions to get them approved. But all the terms, as far as there is no prepayment penalty, recourse contract, and all this will stay intact until the end of the term of the contract. So as you can see, also risk sharing guidance is the only one that has risk sharing, no prepayment penalty. Also, we have independent Sharia board, and we are not affiliated with the bank, like I mentioned earlier, and we are actually based on the equity partnership versus loan. So here is a table that might illustrate how this payment or installment payment will go over time. So for instance, month number 1, it's where we guidance put the house with the customer. Let's say customer put $20,000 and guidance put $100,000, okay? So we have an installment scheduled payment that will be the same until the end of the payment, which is like this one is 15 years. So you can see acquisition. Acquisition this is how much money you are actually buying from guidance to own the house. For example, month number 1, where you made a payment of $727, $414 from there went to your equity on the house. So you can see line number 2, you can see the $900, $585 is the equivalence of $100,000 minus $414. So every month you make payment, your share increases on the house. As you can see, your ownership increases from 20%, 33, 20%, 21, 24, 28, all the way to the month number 180, you are becoming 100% owner. So there is one thing I want to mention. So the more you make payment, I mean, they can always make extra payment if they like to, and they will allow them to buy the house sooner and pay less fee to guidance. So this is how basically it goes. As you can see, profit, the 312, that's basically utilization fee of guidance. Since you are living in the house that's owned, let's say 80% by guidance, and you are taking full advantage of it, so you have to pay them a fee, which is going to be like in a percentage base. So this is where a lot of confusion comes in, is when you talk to a customer and you tell them we are doing co-ownership agreement and guidance will make a profit of, let's say, 4%, and we'll say, but the numbers look like the same. What's the difference between you and, let's say, Bank of America? As far as numbers goes, it's almost the same. But the main difference is what we are doing versus what they are doing. Okay, we are doing co-ownership agreement, they are lending you money. It's the same. Like when you buy halal meat and you buy halal from not halal meat, at the end of the day, it's a meat. But the way this one has been slaughtered and everything, it's completely different with this. So I just want to emphasize on this. The halal or the haram does not show on the numbers, it shows on the contract, on the paper. That's the most important thing. And you need to look for these terms. I need to show proof that this is a contract, it's been approved by who, how you get your credentials and everything. And this is very important, I just want to mention it. So I have a few videos I'm gonna play for you, inshallah, before I conclude, and then I will take your questions. First, I just want to explain what's the difference between guidance share compliant and home financing, and then I'm gonna play like 2 or 3 other videos, inshallah.
What is the difference between Guidance's Sharia-compliant home financing program and a mortgage loan? Guidance's Sharia-compliant home financing program is not a loan. Loan views money lending as a charitable act in which the